Well, good weekend, all. Ira Epstein, and here we are with President's Day weekend. It is Sunday, the 16th of February, 2024. Remember, the stock market is closed tomorrow. We do have tonight a lot of the futures markets open. A number of them will have early closings, so you've got to pay attention. You got to know which ones won't even be open right now. So these are all things. Most of the softs will have a problem there. Grain markets could be closed for the holiday, as you know. Meat markets, you got to pay attention to that. But bonds and notes, they're away in trading and slipping back a little bit. The cash market's closed tomorrow, so I don't think you're going to get a lot of movement. On the energy markets, they are falling back across the board, including, if you will, the heating oil market and the natural gas. And the market knows that the polar vortex is here. It has seen the worst of the weather, and you're down. So was the market anticipating all this and pulling back? That's one of the things you always ask yourself. When we take a look at the market, this is the monthly area chart of just closing prices, no more than that. And for the month, the market's up 1.1%, around 67 points in the S&P, far away from the 18-month moving average of closes, still very friendly chart. Another close-only chart that I look at is the weekly charts, and the market's over that, so the momentum's up, the trend is up, the market's knocking on a door of where it's been recently, and you'll see that as we come to the regular bar chart, and you can see how the market's just been going sideways very gradually, and this has been going on the whole part of 2025. You came up, sort of ran out of momentum, and now the Trump news is what the market is moving on day by day. And you know, there's a lot of it, all right? I mean, it's cuts galore. You're seeing that. It's people being let go galore. Property is going to be let go. You know, nobody's talking about that, but the government has leases everywhere. And in the Chicago paper today, I was reading how they're trying to now whittle that down. So they're not renewing a lot of leases. They're going to combine offices where they can, sell buildings where they can that they own them. Not an easy market to sell in because Chicago, like so many of the large cities, ex-New York, trying to get people to go back to the office, it's not the easiest thing in the world that you can do. It's going to happen over time, but these are the problems. And in the Loop area where a lot of these offices are, well, that's not the hot area of Chicago. The hot real estate markets are by what we call the Fulton Market area, and it's all moved over there. When you take a look, though, you can see how the market just hanging in there. We have nothing that looks bearish. You have higher lows and you have higher highs. Where I went to school, that's a bull trend. The market's over the 18-week average of closes. The bias is up. That's what determines that. And a potential resistance point is 62.18. What you don't want the market to get under is back here, this low. And if I backtrack to it, you can see what that low is. It's the most recent low, and it's 59.35.50. So barring that, this market still looks to me pretty good. When you take a look at slow stochastics, you have a market that is overbought, not embedded. See, when you embed like that, it often gets the market to go further. You're not at that point. So I think the 62.18 is a true resistance point. I'd be cautious up there. When we come to the Dow, first thing I'll start down here, overbought. Trend up, another big resistance point, the 45,700 level. If you were to take out the most recent low, which is right over here, and I think it's 45,965, if I'm correct. 43,965. If that were to be taken out, then I can make an argument that you're going back to the 43,750 zone in the market. If it can keep going higher, why not the 45,700? But the overbought market, if you put in a filter of things, do I buy, do I sell? From my perspective, you pull back on a lot of the buying. I didn't say you don't buy, you pull back. You have to decide what you want, but it's a warning sign that you're in overbought territory, and unless it embeds, you're liable to hit that resistance point and it's gone. The NASDAQ coming up to key resistance, but what we've seen over and over, be it NVIDIA, be it Palantir, be it CrowdStrike. These big names continue to drive the tech. Dell's getting an order from the looks of it for $5 billion right away for computers. Unbelievable how big these orders are that are coming in. They'll use NVIDIA chips. So, these things just keep feeding on yourself. This AI conversion just keeps going and going. And as much as people don't believe in it, this is what's going on. The E-mini Russell is in the bear camp, and that's because interest rates aren't breaking. And in order for them to come alive, you've got to get interest rates doing what? They've got to break so that the small caps get a chance. They're the heavy borrowers, and banks are tightening their lending standards. Not going to be an easy time for them. We've seen a break in interest rates, and suddenly the futures are acting like they want to rally up a bit. If they rally, what does that mean? Remember, this is an inversion market. When they break here, what's happening? And if they go up in futures, what's happening? You should know that from working with your broker. If you get over the 10-year note, be careful here. So any move over the 110 level, well, what that does is it sets up a move to back up here into the 110.20s or so. Dollar index down to the 18-day average of closes. And I am concerned on these charts. If foreign currencies have said they've gone low enough to give a rally against the dollar and capture a lot of the long-term bulls, there is absolutely zero on this weekly chart that says to be long. The market left its uptrend when you took out this low, and the pattern has been down. And now for the first time, you're turning the bias down with it. If it breaks, and that's an if, 104 to 103.95. This is not a buy zone, in my opinion. In the eurocurrency, this is not a sell zone, in my opinion. You've now had a bear market rally back to the 18-day average, but with momentum pointing up and the market trying to hold that number. What does it do from here? You could be a week or two, maybe longer, before you have an idea on the weekly charts if the market at these key averages is going to do anything. It's going to be a rough one. Same in the Canadian dollar. Here's what I can tell you in the Canadian dollar. You have broken the longer-term trend in the market. If you take a look, and I'll bring you back right here, you could see you had lower highs, lower lows. Then the market started coming up like this, and this was your warning sign. You lost the bearish embedded reading. The market, in my theory, should go back to wherever the 18-day average is before this low is violated. And that's exactly what we did, and that's what you're sitting on. So the downtrend is over. I don't know that another one can't develop, but it's not alive at this point. And in the Japanese yen, this whole move down, all it did is take you back to the 18-day average and the market's holding. Any move over the 2-week ago high opens the door up for the 6,800 zone, could easily be coming at you. We're going to be getting shortly a lot of heavy negotiation in Japan between the unions and the corporations. They do it at one time there. The month of April is where we find out. And if, let's assume, pay increases of 3%, 4%, whatever the number is, if it's considered inflationary, the government can then raise interest rates and probably more upside coming. In Bitcoin, we have been sinking down as you're fighting, number one, a falling dollar to a degree, a tight stock market. The correlation is interesting. Bitcoin has been falling as the NASDAQ's been rising. And if you just go back 6 weeks ago, the correlations were not that way. They were if the stock market, especially the NASDAQ, was rising, this was rising. They have separated paths for the short term. When we look at Brent versus WTI crude, Brent is staying over the 18, in other words, it's staying stronger than the WTI. And when you look, you can see that the market is pulled back. Notice the difference here, and I'll get to the WTI. The trend is up, and now you're turning the bias down, whereas in WTI, the trend is down, and the bias is down. So this market's throwing out sell signals at 71.34, basically saying it shouldn't get over 75.5. It's a big risk, don't get me wrong. Trading off weekly charts is always a big risk in futures, especially. I don't mind it in the stock market. I mind it very much in the futures. It's the leverage that hurts you. But in looking at this, the 65.60 level still alive. The market is not yet oversold. A reading under 30 would get it oversold. In the rebob gasoline, I just see a sideways market. Bullish bias to the market, trend up, a lot of resistance at 207.50 area. When we take a look at it all, put it together, well, you can see where you're at tonight. All right, they tried to wipe the gold out to the downside, but it's finding some buyers early on. And again, with the U.S. market's going to have abbreviated sessions, how much follow-through can you really get on them? That's going to be a big question. Remember our free offers. If you go to our website at iraepstein.com, our free offers are there. Give yourself a try of our 2-week free trial. If you've had one before, for the next 3 days only, right into Tuesday, I will give you another 2 weeks. Otherwise, you were barred from getting that on the site. So as a President Day special, give it a try and see if this fits in. You can do it in the Spider or my full research or just the morning futures video. Any of those. So go to iraepstein.com, free offers, choose that and other things you want. And I'll catch up with you all for the futures markets in the morning. When I do some of my work, then I intend on doing special reports tomorrow, a 5-minute special report, and then one major special report. So I'm going to use the day to get things done. You have yourselves a great evening. I'll catch up with you all tomorrow.